The struggle to afford a home is a huge barrier for many young people today, largely due to the sky-high costs of housing. Whether it's buying or renting, the price of having a roof over your head has soared to levels that make it feel almost impossible for those who don't already own property. Now, some people are actually hoping for a housing market crash in order for home prices to come down significantly and make it more affordable. Unfortunately, this wishful thinking overlooks the complex realities of the housing market and how it actually works against the dream of affordable homeownership. What's up, guys? My name is McKeown, and I'm a licensed real estate agent in the Dallas-Fort Worth area, as well as the Orlando market itself. And in today's video, we're going to be discussing why a market crash won't exactly make homes affordable. But before we get into today's video, if you guys are finding the content on this channel useful, please give me a like, subscribe, turn on the notifications to always be notified when I release another video. Now, in recent years, we've seen housing prices in the United States climb at an alarming rate. Now, there's a handful of reasons why we've seen a massive surge in home prices. I've filmed multiple different videos kind of explaining this as a whole, but truth be told, when you have the flexibility to really work wherever you want, which means live wherever you want, and you have incredibly low interest rates, and of course, housing is something that we all need at the end of the day. And generally speaking, I actually just saw a consensus of the last 39 of the 44 years we have lived, or some of you guys may not have already lived. Home prices have gone up, meaning 39 of the last 44 years, if you owned a property on an annual basis, that property more than likely gained value. And to be honest with you guys, a couple of those 5 years where home prices actually went down was during the 2008 financial crisis. So other than that, if you held homes or you purchased a home and you've held it for the long term, you're likely in a pretty good position. But that doesn't necessarily mean if you're sitting wanting to buy a house now, that hoping a housing crash will ultimately allow you to be able to purchase a house in the future. Now, data from real estate analysts show a stark picture. In virtually every single county in the United States, buying a home is no longer affordable for the median American. This leaves many people stuck kind of in a cycle of renting, often requiring roommates just to manage the rent, or just in reality, giving up home ownership altogether. Now, I actually have a recent client that dealt with this just this very week when I'm filming this video. He's a 22-year-old, soon to be 23-year-old recent college graduate with a pretty solid job lined up in the North Dallas area. Now, he was potentially looking at purchasing a house, but he was trying to manage essentially his girlfriend who has a lease in Fort Worth, as well as himself who has a lease and likely would need to terminate that in order to purchase a house. We started looking at new build homes in the Princeton area or far northeast area of Dallas. We're talking new builds for about $300,000. Overall, his mortgage was going to be $3,000 a month, putting only about 3% down. And when you look at all expenses incurred, he'd essentially be losing $200 a month. Now, the good side of this is I gave him a couple suggestions. Now, the suggestions don't seem like they're going to work for him because, again, he has a girlfriend that doesn't necessarily want to do those. And the biggest suggestion I had for him was purchase the house and rent out the other rooms. So you're essentially only paying what you would be paying if you wound up renting for a year, but probably going to be a situation where he decides to rent for another 12 months. And then when that 12 months is up, we're looking at probably purchasing a similar property, but no longer is it probably going to be $300,000. Next year for a similar product, it's probably going to be around $320,000, $330,000, maybe $340,000, depending on just what the housing market does over the course of the next 12 months. But moving on, guys, selling a home at today's high prices doesn't necessarily benefit the seller in the long run either, though. If you're lucky enough to sell your home at a profit, you're then faced with a challenge of buying another property at a similarly inflated price. This leaves you essentially no better off than where you were before. Owning a home now comes with the added burden of higher property taxes and potentially a significant capital gains tax if you sell. Just a disclaimer here on capital gains taxes, you're gonna have to have a property appreciate or gain more than $250,000 in gains, and that's if you're a single individual. If you are a married individual, anything north of $500,000 in gains means you're gonna be taxed on anything over that, assuming that you lived in the property for at least 2 years. Also, in addition to that, the home insurance prices for an annual basis have gone up astronomically as well. So just overall owning a home has gotten extremely expensive. Now, the issue is people wind up purchasing a property, living in it for a couple years, and then moving out and turning it into a rental property. Well, if you haven't lived there for 2 of the last 5 years, that 2 years you lived there goes away. away, and now unfortunately you're going to be paying capital gains on any appreciation that that particular house has had. I'm actually going to be dealing with that struggle here with this house that I'm filming this video in, because I can tell you there's been a significant amount of appreciation in this house, probably north of $500,000 when it comes to potentially selling down the road. And needless to say, when it comes to actually selling this property, I won't have lived here for 2 of the last 5 years. So that's going to be something that is going to be difficult to stomach if I don't utilize a 1031 exchange and defer the taxes down the road. But anyways, the idea that a housing market crash would suddenly make buying a home easier ignores several crucial factors. Now, first, if you're not in a position to buy a home now, a market crash is unlikely to change that. Historically, even the worst housing market crashes haven't resulted in price drops significant enough to suddenly make homes more affordable to everyone. Now, after the 2008 financial crisis, as I mentioned earlier, which saw the biggest housing market collapse in history, average house prices only fell about 20% from their peak. Now, this decline was not enough to make home ownership accessible to those who were previously priced out, especially since lenders became much more cautious and tightened down their borrowing criteria. Many potential home buyers find themselves unable to save enough for a down payment, a hurdle that a housing crash won't really help you with. Moreover, lenders look for 3 main things when approving a mortgage: a substantial down payment, good credit, and reliable income to ensure monthly payments can be made. This entire criteria used by lenders to assess these factors are complex and varied, making it challenging for many would-be buyers to qualify for a mortgage. For instance, income from self-employment or part-time jobs is often viewed differently than income from a traditional W-2 or full-time job. And this obviously adds another layer of difficulty to some borrowers. Now, building more houses is one solution often cited to address the housing affordability crisis. However, this approach is hindered by numerous obstacles. We're talking about high land cost, restrictive local zoning laws, and the expensive, time-consuming process of dealing with building regulations. These factors make new construction both slow and costly, further exacerbating the housing shortage. Even if new builds were built, a market crash could discourage builders from taking on these new projects if land values plummet, fearing losses on their potential investment. So in essence, the challenges facing young people and others striving for home ownership are multifaceted and deeply ingrained in the structure of the housing market and broader economic conditions. Simply hoping for a housing crash as a means to make homes more affordable is an oversimplification of these complex issues. Now, one of the biggest comments that I get as a real estate agent, oftentimes with new clients or potentially new investors, is kind of an analysis paralysis, meaning that they're, investors trying to assess a ton of deals with ultimately the likelihood of them actually closing on a deal is slim to none, because they get stuck in just this process of assuming that something's too expensive, that it makes no sense as an investment, so therefore it's not worthwhile. And vice versa, if you're not an investor, but you're just an individual purchaser, they get into this thought process of the fact that, hey, interest rates are too incredibly high right now. I'm gonna wait till interest rates go down. Once interest rates go down, now housing is more affordable. But in reality, guys, the only thing that's gonna happen when interest rates start to fall, which a lot of people are projecting that to start as soon as June this year with multiple different rate cuts from the Fed. I'm telling you guys, the housing market just in Q1 in 2024 is already starting to heat up, and we're still at pretty high interest rates. I can't even fathom what's going to happen with the real estate market if we start seeing stuff more in the 6s and 5s, who knows, maybe high 4s, depending on where the Fed ultimately cuts rates to. It's going to cause an absolute insanity in the real estate market. Now, I'm not saying that this is going to result in something that we saw, in 2020, 2021, where rates were just incredibly low. I don't see rates going back to where they were. I'll be honest with you guys, I have a rate under 2% on a 15-year note and a handful of investment properties in the 3s. That just isn't going to happen. What I will do, though, is tell you I'm going to essentially hold those notes for the entirety of their loan. But even if we do see rates consistently fall over the course of maybe the second half of 2024, I'm telling you guys, as I mentioned just before, it's going to be a very interesting real estate market, because a lot more buyers are going to come out into the market. Maybe some more sellers will decide to wind up selling because their interest rate difference from where they currently are to where they may be moving to may not be as extreme as it is right now. But I'm telling you, all of those buyers that are kind of waiting on the sidelines right now are going to come back into the real estate market here and drive those prices up. Now, this is certainly not financial advice, but this is what I would be doing if I needed to purchase a house. And truth be told, I'm going to be looking to purchase a lot this year with the intent to build kind of my dream house in it. So stay tuned for future videos on that content. I'm going to be detailing the entire process. But if you are an individual looking to purchase your first house, I suggest that you do so sooner rather than later, as long as you are financially capable. Again, this is not financial advice. This is just something I would be doing if I was in a similar position. The main reason why is because, yes, you're going to be able to get a better deal now, even though I have multiple clients right now struggling to be able to pursue their first time home ever because they're dealing with multiple offers in a pretty hot area. Now, yes, your interest rate is certainly going to be higher now than if you purchased in 6 months, 12 months, 18 months, or any time in the future, because rates are likely to go down. But on the flip side, if you purchase a house right now that's $300,000 at a 7% interest rate, but you decide to wait, just like my client that's deciding to wait till next year, he may be able to purchase a home and have his interest rate more in the fives. Let's say maybe that's a realistic goal in the next 12 to 18 months, but no longer is that house affordable at the quoted unaffordable rate of $300,000 because it came with a 7+% interest rate. That house is now $350,000 or $375,000. And instead of being able to refinance in 12 to 18 months and have a much lower payment, his payment is likely going to be substantially higher because he's purchasing a house at $375,000 rather than $300K. It goes back to what I said earlier in this video, guys. If you intend to purchase a house, 39 of the last 44 years, home prices have continued to go up on an annual basis. It's safe to say that if you purchase a house and you look to hold it for more than a couple years, you're going to be in a decent financial position. The biggest thing that I have or suggestion for you guys is if you're buying a pre-owned home, where you wind up getting kind of screwed is if you buy a home thinking everything's okay, but lo and behold, you wind up having to replace your HVAC, repair your roof, do a lot of remodeling on the inside, and just make it to the house that you want it to be, and you wind up over under on the house. That's a situation that I would make sure that you do your due diligence and don't get yourself into. But overall, owning a home is going to be a solid investment for most folks. If you own a home now, if you're looking to purchase a home in the future, as long as you hold on to that house and kind of keep up with the house, you're going to be just fine. Thanks again for watching, guys. Make sure to like and subscribe, and stay tuned for the next video.